Okay, good morning. It's 5 minutes past the 7, and it's it's Saturday today, right? So give me 2 minutes. Let me quench my thirst, man. It's in the morning and I'm already thirsty. So yeah, let's get to it. Now it's 5 minutes past the 7 in the morning. It's Saturday, right? 2026. And this is the beginning of the year, man. Right? We're still in January. So this is how I analyze, man, and how I look at charts. So basically, first you need to know how the market moves, right? Because you know, man, before you can place a trade in the market, you need to know the market structure before you can look at the points of interest, liquidities, Fibonacci retracements. You need to know the structure, right? Because like they always say, man, the market structure is your trend. The market structure is your friend, right? It's your trend friend. So because just like in life, man, if there is a trend on something, most people are gonna follow that trend, right? Let's say today you wake up and someone has beaten another guy, or they have stolen some valuable goods. That's a trend for that day or that week or that month. So people are gonna follow that trend. So, and for you to spot a trend, you need to know how to map the market structure, because you cannot do that if you don't know the market structure. So like I always do, I explain the market structure in the easy way, because like I always say, before we get into details, remember that the market structure moves in three ways, right? The market structure moves in three ways, whereby we have what we call an uptrend. An uptrend is when price prints a series of higher highs and higher lows, right? Series of higher highs and higher lows. And when price is in a bullish trend or in an uptrend, it's respecting highs and it's respecting lows and disrespecting highs. What I mean is, when you are in a bullish trend, you will see price breaking highs and respecting lows, breaking highs and respecting lows. Because now when price is in a bullish trend, on the other side, you should be looking for what? For buying opportunities, unless you are trading a retracement. And retracement, yes, as much as you can make money with retracements, but not every retracement you can make money with, right? But with the continuations, you are more likely to make money. Yes, you can be taken out by the first movement if you're a risk trader with tiny stop losses. But maybe even if you're a risk taker with a proper SL, you might even get those movements even before the confirmations, but only on a continuation. We will talk about that on the next lesson, right? So now we also, like I was saying, man, when you are in a bullish trend, you're gonna see price breaking series of highs and respecting series of lows. So now when the market is in a bullish trend, you should be looking for buys. So beside bullish trend, we also have what we call a range, or should I say a consolidation, whereby you get same highs and same lows, or same lows and same highs. We call that market a range. So when price is moving like this, that means price is ranging, right? That means that price is in a range, right? So here we can even map it like this. Right? you can see we have equal highs and equal lows. Right? Okay. So now you are in a series of equal highs and equal lows, which means that the market is not like giving you the proper direction. So it can move in a sideway. The consolidation can be like this, but still the consolidation, right? So now from uptrend, range or consolidation, we also have a downtrend, and a downtrend is whereby the market gives you a series of lower lows and lower highs, whereby now when price start, you can see that you start by having a low. You start by having a low here, right? Then a high. Then instead of price breaking the previous low, it gives you a higher low because it's higher than the previous low. Then obvious from that higher low, you'll be expecting what? A higher high. Higher low, higher high. Right? Now when price is in a bullish trend, it's gonna respect its highs and disrespect its lows. So that's how you look at the market structure, right? We'll talk about the time frames when we get there. So now you can see that on a bullish trend, you are looking for buys. On a sell range, on a bearish movement, you are looking for sells. On a bull, you are looking for buys, right? So now when price is moving like this, you start by, sorry, let me use a different color. You start by having a high and a low, right? Now there's a point, there's what we use, a system that we use whereby you look at the 4 points pointing in the same direction. We will come to that because it falls under the market structure, right? So instead of price breaking the high, it gives you the lower high. Why? Because that lower high is lower than the previous high, and the next one is the lower low because it's lower than the previous low. So from here, lower high, lower low. So now, whereby if you are looking at the bearish movement, you'll be expecting a retracement, right? You'll be expecting a retracement. You'll be expecting a retracement, whether it's a 50% or 78.6 or 100 before a continuation, because now you'll be looking at what? After a lower low, price has to go and print a next lower high. Unless they do what? Unless they shift here. Because once they break this leg here now, that means that the market has changed the character. It's now bullish. And you should be looking for buys. Same goes to the buying scenario. After you get that higher high, you are expecting price to retrace the previous the space between the higher low and that higher high, whether it's 50% or 61.8, 100% or 78.6 before the continuation up. And normally we trade an uptrend and a downtrend. Why? Because that's where the market structure is clear. Now when the market structure is ranging, what we know is we simply know that the market structure is building liquidity, because most of the time after you get consolidations like this, is either you can even have price shifting there, then start giving you something like this, right? Or you might see price shifting here and start giving you something like this, right? Or you might see price giving you something like this, right? It's vice versa, same as this one is, just vice versa, whereby you can get a break, right? So consolidations or a range is where you get equal highs and equal lows. That means that there's a support here and there's a resistance here, and I don't trade that type of movements. No, I only trade when the market gives me clear structure. So now we have done with this. This is, it might be a simple info, but it's very essential. So we're done with this one. So now what you need to know again, now after you get this, what you need to know now, you need to know that you need to know that once you know, or once you start learning on how to map the market structure, you need to know time frames, right? And what you need to know about time frames is to be able to match, right, or wait for price to match with those time frames. Like I was saying on our last night session, when we talk about, was it boom 600? Yeah. So now if you look at time frames, remember what I said, the market structure for the, when we are in a bullish trend, we're going to see a series of higher highs and higher lows. So I'm just going to take an example on that one. So if you look at the structure here, this structure is in a bullish trend, right? Why am I saying this? Because this structure, we had a low here, then a high. Instead of price breaking this low, it failed to do that. It broke the high there. So once it broke the high, that means that from here now, we have a higher low. And once we have a higher low, now I know that after a retracement, I have to be in a bull run. So now, when you look at the market structure, before you can say price is in a bullish trend, price has to point 4 points point in the same direction. It has to give you like 4 points point in the same direction. Because once price give you the 4 points point in the same direction, that means that you have a break of structure and a change of character. So which means that by the time price start to print, because once we have a 4 points point in the same direction, let's say on daily, and daily is around here, before we can say we have a higher high, we need to see the 4 points point in the same direction on 4 hour or 1 hour before we can rally down. Because now after I see the 4 points point in the same direction, we will talk about the break of structure, right? Like I was saying, we're gonna rewind everything around here, right? So after I see this 4 points point in the same direction on H1, that means that now minute 30 and minute 15 can give me this, then they can shift the 1 hour, retrace again on 30 minutes or 15, up until they done with the retracement. Because now, once they are done with the retracement, what I simply know is, okay, from here now, let's say this one, it's H4. So once they are done with this H4, now I know that, okay, since we have a higher high here, that means that this higher high here, remember when we are in a bullish trend, we need to see price respecting lows and disrespecting highs. So then after this retracement, that means that the bearish movement is about to end. And when the bearish movement is about to end, or when the bearish movement has ended, what I will see again 4 points pointing the same direction. Now, this 4 points pointing the same direction, now they will be in alignment with the bigger picture, but we will get on that one. So when you look at this, you can see now you have what? You have 4 points pointing the same direction. So you might even have this 4 point pointing the same direction, even on H4 or still on H1, still okay. Because you'll be following the same information, because once you see those 4 points pointing the same direction on that time frame, that means you have a higher low that needs to hold price until price creates a new higher high at the top there, because from here you'll be expecting the market structure to continue with the bullish trend. So you are in a bullish trend. So when you sell, you'll be going against the trend. But when you buy, you will be trading with the trend, right? You'll be not going against what's already there. So with this info, it's the same when it comes to the bearish movement, but we'll talk about the bearish scenario on the other time, right? So right now we'll just focus on the buy scenario. So I'm not gonna go back in time and show you how you could have executed and stuff, but because the main topic here is all about the market structure. But you can see right now I'm in step index, and with the same information we will jump into charts. But remember what I said, when you are in a bearish trend, you need to see the 4 points pointing the same direction downwards. When you are in a bullish trend, you need to see the 4 points pointing the same direction upwards. The time frame, because we differ as traders, right? But personally, I start analyzing from daily, 8 hour, 4 hour, 1 hour. Then I can execute on minute 15. Even on H4, I can execute on H4, because what matters is how much you are willing to risk, and how much you are willing to make, right? That's what differentiate us as traders, right? So now you can see that, okay, now if you look, remember what I said. I said when price is in a bullish trend, you see 4 points pointing the same direction upwards. Now when price is in a bullish trend, that means you'll be looking for buys, right? That means you'll be looking for buying opportunities. Now you need to know time frames, like I was saying, right? You need to know time frames, because time frames, they move like this. Let's say they move in ranges. You'll be having a daily range. Inside the daily range, you're gonna have a 4-hour range. Inside a 4-hour range, you're gonna have a 1-hour range. Inside a 1-hour range, you're gonna have a 15 minutes range. These things, they need to match together, right? They need to match, so that from the inside you can target the outside and make lots of pips, right? So and bear this, guys, in your mind, guys. This is not a holy grail, right? Even myself, I can still experience losses, right? But make sure that you personally, my stop loss is like $10 a sell, right? Because I don't want to lose more than that, especially on daily basis. You can have a $5 stop loss, you can have a $20 stop loss. As traders, man, so even once you get knowledge, man, you still need to apply risk management, because you know that you're still gonna experience losses, because this is a business, right? It's not a gambling. It's not a gambling scheme, but a business. Business can make money and still suffer, you know. So, but yeah. So remember now, if I'm looking at the bullish trend, I mean, on a daily, that means that I should be looking for a series of higher highs and higher lows, right? A series of higher highs and higher lows. A series of higher highs and higher lows. I don't want this session to be long, right? So now looking at the structure, you can see that I can see that we are going to buy step 500 this week, right? Starting from today. Even if you get across with this video, you can make the right decision, man. Or if you are in my free groups, obvious, you're gonna make money, because I think after this session, I'll be giving them a signal, because I can see that we're gonna have a real buy, man. These are serious buys, man. These are serious buys, man. These are serious buys. So already here I can see we have a major change of character. So before we go to change of character and stuff, remember, we need to see 4 points pointing the same direction, right? So because in a series of higher highs and higher lows, so I won't name them, but here it's a higher low. So this was a low. You know what? It's not like I'm lazy and so let me just write them. So here we have a low, because price was in a bearish trend and it's been moving in a bearish trend. So we have a low there. Then here we had a high. Right? Then we have a higher high. Right? So instead of price, so after this high, after this high, instead of price taking this low, they retraced there, then they gave us a higher low. So a higher low. So with this information I've been giving you, you can see that from this higher low, these guys did what? They went up and give us a higher high. So after they gave us that higher high, remember what I said, after the 4 points point in the same direction, you can make money with the retracement and you can make money with the continuation, right? So now you can see that price is in a bullish trend. Why am I saying this? Because we have 4 points pointing the same direction. And remember what I said after price break the structure. Remember what I said yesterday. When price shifted this high, when you take out this high, high, that means you have a major break of structure, right? So after that break of structure, there's gonna be an information that you look at, right? There's gonna be an information that you look at. So that information is gonna work for your advantage, right? Because after this, now I know that, okay, if I take my Fibonacci, because before I pull my Fibonacci, what I need to look at is this candlestick here. Go and watch my previous session. I talked about this candlestick here, because if we have an impulsive breakout, that means that if I pull my Fibonacci, if I pull my Fibonacci from the origin low to the current origin higher high, I should be trading inside 61.8 and 50%. Okay, you can see here now I have a demand here, right? I have a demand zone here. Okay, right. So I have a demand zone here. So with this demand zone, the reason why I was looking at 50% is because 50% and 61.8 is because I know that this from the higher high, these guys, they need to retrace back to that point of interest. Why? Because it's around 50% and 61.8, and that's where I should be looking for buys. So if I'm looking for, let's say I was looking for price and this information was not yet there, what I wanted to see was a closure below this candlestick, because once we see a closure below that candlestick here, that means that our sell range has begun. We now have 4 points pointing the same direction, H4 and H1, right? We have the 4 points pointing the same direction, because remember now, once we shift down below there, you'll be looking at your market structure. So let's go to 1 hour, because this is very simple math. It's a very simple math. Remember now, once we close below, that means you have your 4 points pointing the same direction, right? You have this 1, which is 1, you have 2, you have 3, you have 4, because 4 was closing below the range. You can see here they tried to close below the range, but they failed. But here they did close below the range. Now, after you get this information, you can see that, okay, these guys, they gave us a 4 points pointing the same direction. And when I trade after the 4 points pointing the same direction, is safe than when I trade before, right? Let me take a CPS, about to get busy. All right, so now, since we shifted here with an impulsive movement, that means when I take my Fibonacci from the origin high to the origin lower low, I'll be trading inside 50% and 61.8. I'm not going to look for points of interest at 78.6. No, I'll be looking for points of interest inside 50% and 61.8. If you look inside 50% and 61.8, we had this last buying candlestick here, right? Now, this last buying candlestick here is my refinement. Now I can delete this one here, because now from here I know that price is gonna target my next 1 hour low, because it needs to give me series of lower lows, lower highs, lower lows, lower highs, right? So once price tap back inside that red zone, what I do is I go to 15 minutes. So I wasn't supposed to do this, because this lesson is basically based on the market structure, but this is also essential, just to give you a hint. Now, when I go to 15 minutes, I'm not going to refine this point of interest because we are in 15 minutes. No, what I simply need to do is to see price changing this character, because if you look at the year, this here was a break of structure, right? Now, if you look at the last break of structure, remember what I said yesterday. When you see this break of structure, if you look at this break of structure, it was weak. That means that price is about to close below the last buying candlestick, which is this one. Once they close below the last buying candlestick, the bearish movement has started. But what you need is a candlestick that was responsible to close below that, because the next one, when it opens, you are gonna be in. So you can see this one black candlestick closed below this candlestick. So when this one opened, when this one opens, okay, let me indicate. You can see this candlestick here is the one that closed below, right? So you're gonna use it as your SL, right? sort of an engulfing candlestick because it engulfed every candlesticks there. Once they engulf, the next one, when it opens, you are in. Now, once you are in, your stop loss is going to be 2-3 pips. So normally what I use is 0.50%. I risk 0.50. When I trade currency or synthetics, I always risk 0.50%. Now, my first take profit, they will be here, because here, if I see price failing to break with a body like it did here, that's when I'm gonna collect everything. But since they shifted with a body, that means there's a lot of cash. There's a lot of sellers in the market. Now, when there are a lot of sellers in the market, what you do, you go to that higher time frame you were using for those analyzation, which is 4 hours and 8 hours. Then when you get there, you're gonna target the actual point of interest, which is this point of interest here. You see, this is the one that you trade up until. So you can see this is very simple, because it doesn't mean, even if you don't want to hold all the way to that, all the way to this zone, you need to know your ranges, right? So on our mentorship, we teach about ranges, on how to use ranges. We talk about those, on how to use ranges, whereby inside this info you'll be looking for trends, right? These are trends inside trends. You'll be looking for bearish scenarios inside those ranges, right? Whereby you just look at the ranges, and the first leg to shift here was this candlestick. So which means that this candlestick, you'll be selling on that candlestick there, not above it. No, you only sell below, right? You only sell below with your stop loss. So you can see, first time they came, you could have sold there. Remember, your stop loss has to be 2-3 pips above the engulfing candlestick, or you can just do what I do by risking 0.50 per trade. You can see there. So they closed below here, right? They came again. You are in. Sorry. You are in here. 0.50. You can see, you can even put it here, same SL there, because you're only gonna move your stop loss once we close below the range. Once we close below the range, that's when you can take your stop loss from where it is to there. Then you can keep on holding to the bigger picture move, because whatever trade you take, all your targets will be down below there, right? So before we can even, because like I always say, man, analyzing, explaining what's already has taken place is very easy, and everyone can teach how to trade, but not everyone makes profits, right? Because yes, man, it's easy to teach and explain, but when it comes to the real actual thing, that's where you will see that there's some traders out there who doesn't know what to do. So according to the market structure, I should be looking for buying opportunities, right? I should be looking for buying opportunities. So now, looking for buying opportunities, you can see that we are still in a sell range, because you can see here, if I put it like this here is still my sell range. Will price close below the previous candlestick or inside? Because when they close inside, that means that lower time frames, man, they have started the bullish movement, right? The bullish movement. Now if you look here, you can see we had this candlesticks there. Then this was our last selling candlestick, whereby even when price breaks here, I can go to lower time frames, enter before they break structure here, right? So, but that's not the topic for today. Now let's go to 1 hour, because now that candlestick here that they took out there, it's our change of character. Because if you look at the structure here, let me put it back to black. I can put it like this. Now here we have an internal change of character, so which means that this was a sweep and was also a break of structure according to the market. But a sweep, it's also a break of structure. If you don't want to say a break of structure, you can say a sweep. So they swept the liquidity there, and here, that time when they closed here, like I always say, that means that they gave you the 4 points pointing the same direction, right? So you can see you have 1, 2, 3, and 4 there. And you can see that they came back to this demand. And that time when they came back to that demand, that's where you were supposed to buy. So according to this word here, if you look at the structure, price has shifted there, and you can see we have this untapped demand here. Sorry, this is our untapped demand zone. Let me lock it. So now if you look at this demand zone, you can see price, it's in a bullish trend, a bearish trend. So they can still come to that demand, that refined demand zone there, right? They can still come to that refined, right? Because like I always say, when I analyze, I start analyzing on higher time frames, and you can see that on higher time frames, they already tapped a bullish candlestick there. But like I was saying, if they don't close inside that red box, that means we are not going to buy that. We are not going to buy immediately, right? When they fail to close above, because once they close above, that means a new lower low has been generated, right? Because looking at the structure, it's still bearish, but the trend is bullish outside, but internally the bearish movement started the lower high, lower low, lower high. This one is just the one move. Then we had a lower low, lower high. Is this a lower low? No, because there's no a candlestick that's shifting here, because once they close below here, that means this is a lower low. So even here they can even come to this, they can even come to this level and start giving us a lower high there, before they even give us the actual push up. So we are still bearish, man. And when we are bearish like this, you can see that if you look at the current structure, since they changed character at the top there, I won't go back there, but you can see that here we are still bearish, man. Bearish, because you can see here I have a break of structure, and by the time they close above, by the time they now close above this, that's when we will now have a change of character. So just 1 minute, 1 hour. Okay, so that's when we will have a change of character, right? So that means that price still in a bearish trend. So even here they can even come fail to break structure, tap around this ones, tap here before they shift. So you know what, just give me 2 minutes, guys. Just give me 2 minutes. Okay, sorry about that. So now when you look here, when you look at the structure, even here where they are, they still have a room. Let me delete this. They still have a room to even drop to here before the actual push up, right? So because we still haven't shifted the market structure, right? Or the market structure haven't shifted yet. So if I go to 1 hour, 1 hour, they have printed a low, right? They have printed a low according to 1 hour, not according to 4 hour. Remember, 4 hour, they have to confirm there. 1 hour, they confirmed here. When they shift here, that means now we have a new low there. But looking at the structure, what I can do is pull my Fibonacci from here to here. So if I look at the structure here now, I can see that, okay, inside my range, we have a supply around 78.6, but how we broke structure with an impulsive movement. So what I will simply do is look at 50% and 61.8. So around 50% and 61.8, you can see we have a breaker block here. So what I will do is I will mark, the body. So we have a breaker block. So now these guys, when they come here, when they come here, 15 minutes has to give me 4 points point in the same direction before I can sell from there to here. Because if they close above, that means there is a potential. If they close above this breaker block, there'll be high chances that the market is now gonna change, correct? Right? Right? Now it means that the market, it's more likely to change, correct? So before we can even put this green, before they close above this green, you can even put it on the body. No problem in that. You can even put it on the body like that. So until they close above there, remember what I said. You can see they are selling, like I was saying, because the bearish the current trend is bearish. But here already now we have a same leg. You know what? Let me just clone this to save time. Right? We have this. We have buyers here. Buyers here. So this buyers, the market can even come, take out these buyers, use them as liquidity to even shoot here, come here, and then you start to have something different. Because now if you look at the internal structure, okay, let's go back to 8 hour. The reason why I like 8 hour is more similar to daily. And like I said, I don't want this long. So we have this one here as our major swing low. Because now this is a external structure, right? You are looking at external because you are in a daily. You are looking at an external structure. Note this down. You are looking at an external structure. Swing low, swing high, swing higher low, swing higher high, swing higher high there. Is this a swing higher low? Not yet, but we want to see a swing higher low here. That's why we want to see those shifts on lower time frames, right? But when you look at lower time frames, that swing low, they're more likely to come and print it around here. But even if they don't, we'll be looking at how the market structure shifts today, because even if we get our 4 points after the breaker there, we can act, right? So now, according to the internal structure, the external structure is bullish. Now, according to the internal structure, let me just focus here. The current structure, you can see that we have this lower low, this lower high after those 4 points, lower low, lower high, lower low here, went down, lower low, lower high. So according to 1 hour, yes, they already generated this as a lower high, but before they close above the 4 hour, I wouldn't consider this a lower high. This is a fractal lower low. But I'm expecting them to give us a lower low here, but I will confirm when they close the H4, right? Because that's the H4 shift that we want. Because now when you go to 15 minutes and 30 minutes, but normally I use 15 minutes, I wouldn't be refining anything there. But if I want to refine, yes, I can refine to this, because you can see that still I'll be trading inside that gap, and I'll be trading this. Because why I can refine this, because if you look here, we have what we call an IDM, right? We have what we call inducement, because once price take out this leg, retail traders they're going to assume that price has changed character already. Because let's say where they are, because where they are, we can buy here if we scalp, but I'm not a scalper, right? Buy there. Retail traders, when they see price shifting that IDM after this retracement, they're gonna buy, obvious, maybe around the breaker block. Price can even come here, take them out, retrace to this zone. So it's just you just look at the market, man. You just look at the market, and you can see here they fail to take out with an impulsive movement. So, but we have an impulsive candlesticks moving out. Now you have a gap here. So, but I'm not a scalper. It's just to show you that when time frame matches, when you match time frames, man, it can work on your advantage. But focus on the bigger picture, man. The bigger picture is those cells there, and maybe the second ones after confirmation. Then yeah, the bigger picture will be those buys there. So this setup will be shared on the Discord and the free group. If you're not on the Discord, make sure you get a link for the Discord, so that you won't miss this type of movements, right? So where they are, if I wanted to scalp, but I'm not a scalper, but if this was boom 500, crash 500, VIX 75, 1S, VIX 75, I'll be jumping in, because those are my favorite pairs. So I can even pull my Fibonacci here again one time. $61.8. So if you look at this, look at 61.8. So now when we sell there, Obviously I'll be risking 0.50%, so it will be covering all 0.50, 0.50, 0.50, 0.50%. You can see that so 0.50 is around here, so I can even put it, because still I'll be risking less than 1% of my account, right? So I can even put it 3 pips, which is like 0.63. So which means that if it's gonna be 0.63, that means, let's say if it was a like 0.50 and I'm willing to risk $10. So since the stop loss has changed from 0.50 to 0.63, which is still less than 1%, instead of risking $10, I can risk maybe 7, right? Just to give you, just a rough idea, man, on how you can look at this info there. So according to lower time frames, yeah, man, you should be looking for, wait for them to come back there. You can even refine it a little bit just here, because when you're trading retracements, you need to be more precise. When you take your trades, you need to be more precise when you take your trades, man. Because now if I take my Fibonacci from this one to this one, this retracement is not a 50% retracement, so I won't trade it. I won't trade it. I will wait for them to come here. 0.50. No, because it's a retracement, we'll be risking 0.25, which means that you will wait for a confirmation first. Once price tap in there, then yeah, from there you'll be targeting this. Let's say they don't buy there, they continue going up there. No need to worry, because if they don't buy here, you should not sulk about it, say you missed a trade and stuff. No, you know that if they fail to give you those buys here, you'll be selling from that breaker block after the confirmation. You see, so it's just matching time frames and waiting for confirmations. But like I always say, some moves, man, they are not worth trading. But this is the setup, man, and that's how you map the market structure. And yeah,